Okay, let's talk about something that's probably on everyone's minds these days.
Yeah.
The stability of banks
Mm-hmm.
and, more importantly,
Right.
how to make sure your money is safe no matter what.
Exactly.
So today we're diving into an article.
Okay.
It's called Protect Your Money. Banks are falling apart. Here's how to stay safe. Pretty dramatic title, huh?
It is, it does grab your attention.
Yeah, and it paints a
Yeah.
pretty alarming picture.
For sure.
What's happening in the banking system right now.
Yeah.
So our goal today is to break down the key information from this article
Yeah.
and, most importantly, what you can actually do
Yes.
to protect yourself.
Absolutely.
So the article starts off by talking about this
Oh,
idea of a
yeah.
delicate balance in the banking system.
Yeah.
What exactly do they mean by that?
Well, the way banks work
Mm-hmm.
is they take in deposits from, everyone, individuals, businesses,
Right.
and they use that money to make loans.
So they're constantly juggling. This need to have enough cash on hand
Okay.
to cover those deposits if people want to withdraw,
Right.
but also lending out enough to businesses and individuals to make a profit
Yeah.
and keep things running.
So it's kind of like if you're
Yeah.
juggling, 3 balls,
Uh-huh.
and then somebody keeps throwing more balls at you,
Exactly.
and they're saying that the current economic situation,
Exactly.
inflation,
Yeah.
rising interest rates, all that is like those extra balls.
It's making it very difficult to maintain that balance that you're talking about.
Yeah, it's hard not to feel a little anxious when you read some of the statistics in this article.
Yeah.
They say over 3,800 U.S. banks are at risk.
That's a lot of banks.
Right.
Yeah.
With $478 billion in what they call unrealized losses.
Right.
I mean, those are huge numbers.
They are very significant.
What does that mean for,
the average person with money in the bank.
well, unrealized losses?
Okay.
It's a bit of a technical term,
Yeah.
but it essentially means that
yeah.
a bank has investments
Okay.
that have lost value,
Okay.
but they haven't sold them yet.
So like if you had
Yeah.
a stock that went down,
Yeah.
but you didn't sell it yet.
Exactly.
Okay.
It's like a paper loss at this point.
Okay, I see.
Right.
So it's not a problem until they actually need to sell those assets.
Right. And then it
Yeah.
becomes a realized loss.
Got it.
And that can weaken their financial position.
So what should we as, everyday people
Right.
be looking for as red flags?
Well, the article talks about a few things.
Right.
One is bank closures.
Okay.
Pay attention to whether banks are closing branches in your area.
Well, I know they're doing that a lot.
Right.
They're saying in this article, over 700 branches have shut down.
Exactly. And
Yeah,
it can be a sign that banks are under pressure.
Got it.
And then also stories of
Yeah.
frozen accounts.
Right. Like Ryan White.
Yeah, exactly like Ryan White.
He had $5,000 in his accounts.
Right.
And just,
And couldn't access it.
yeah, one day he couldn't get it.
Exactly.
That's frightening.
Very frightening. And, thankfully it's still relatively rare,
Okay.
but it does highlight
Right.
why it's so important to have a backup plan.
Okay.
And the article also mentions that the move towards digital banking, while it's convenient,
Right.
it can also create
Yeah.
some new vulnerabilities.
I can see that.
Like, what happens if there's a system outage
Oh, yeah.
or a cybersecurity attack?
Or even just like a power outage.
Exactly.
Right.
And you suddenly can't access your money.
Now, one thing I didn't quite understand in the article
Okay.
was this whole connection
Mm-hmm.
between the banking system and commercial real estate.
Oh, right.
Can you help me understand that?
So a lot of banks invest heavily in commercial real estate loans.
Okay, so like loans to office buildings and...
Yeah, office buildings, shopping malls,
Okay.
apartment complexes, things like that.
Okay.
If businesses are struggling
Okay.
and they can't pay back those loans,
Mm-hmm.
that can create big problems for banks.
So it's like a domino effect.
Exactly. If the commercial real estate market takes a downturn,
Mm-hmm.
it can ripple through the entire banking system.
It all sounds pretty scary, honestly.
I understand.
But the good news is that
Yeah.
this article also offers some practical advice on what we can do to protect ourselves.
It does. Absolutely.
So let's dig into those.
Yeah, let's do it.
What's the first step?
The first step they emphasize is diversification.
Diversification.
Don't put all your eggs in one basket.
Oh, so not just having all your money in one bank.
Exactly. Spread it out
Okay.
across different banks,
Okay.
credit unions.
Okay.
That way, if one institution runs into trouble,
Okay.
you're not completely wiped out.
But isn't it possible that,
Mhm.
if there are these larger systemic risks
All right.
that all banks are facing,
Uh-huh.
that diversification might not help as much.
That's a good point.
Right.
It's true that
Yeah.
there are certain risks
Right.
that affect the whole system,
Right?
but it's also important to remember that not all banks are created equal.
Oh,
Some
really?
banks are more conservatively managed than others.
All right, so do your research.
Exactly. Do your research.
Look.
Choose institutions that you trust,
Got it.
and
Right.
you can mitigate some of that risk.
All right, the second step they talk about is having an emergency cash reserve.
Yes. Very important.
How much should we be aiming for?
Most financial advisors recommend having
Okay.
3 to 6 months of living expenses
Yep.
saved up
So that,
in a liquid account,
okay,
so that if something happens,
like if I lose my job or...
yeah, you lose your job.
Yeah.
There's some kind of emergency,
Oh, yeah.
you have that cushion
Okay.
to fall back on.
And what about,
Right.
where should we kick that emergency fund?
Well, you want it to be accessible.
Okay.
Right.
So not like tied up in stocks or...
Not tied in stocks, not in real estate, something that you can
Okay.
get to quickly.
So a savings
A
account.
savings account is good.
Okay.
You might also consider a high-yield savings account.
Okay.
Or a money market fund.
Okay.
Those can earn you a little bit of interest
Okay.
while still giving you quick access to your cash.
Got it. And then the last step they talk about
Mm-hmm.
is investing in what they call safe haven assets.
Yes, these are assets that tend to
Okay.
hold their value or even go up in value
Okay.
when the economy is uncertain.
Oh, I see. So it's kind of like a
Yeah.
safety net for your investments.
Exactly, a safety net.
What are some examples of those?
Well, gold is a classic safe haven asset.
Okay.
People have been turning to gold
Okay.
for centuries.
I've heard of that. Yeah.
When things are uncertain,
Right.
you also have inflation-protected bonds.
Okay.
Those are designed to
Ah.
protect your investment from the erosion of inflation.
Got it. Okay.
And then real estate can
Wow,
also
okay.
be a safe haven asset.
Especially if you
Yeah.
own it outright, you don't have a mortgage.
Exactly.
Right.
You know,
Right.
in times of inflation,
Yeah.
real estate prices often go up.
Okay, cool.
Yeah.
So basically what we're hearing
Mhm.
is that we need to be
Yeah.
proactive,
Proactive. Absolutely.
informed.
Informed.
You know, don't just bury your head in the sand
Exactly. You can't
and hope for the best.
just hope for the best.
Right.
You have to take steps to protect yourself.
So the big question is, you know,
Yeah.
what else can you do to feel more financially secure?
Mm-hmm.
What resources are out there that can help you
Yeah.
navigate these, you know, very complex issues and make the best decisions for your money?
It's a great question.
I encourage you to explore those questions.
Yeah.
Do your own research
Exactly.
and take control of your financial future.
Couldn't agree more.
And that's it for our deep dive today.
Thanks for having me.
I'm so glad you were here.
It was a pleasure.
See you next time.
See you later. Bye. Bye.